Welcome to another video from Elevate Forex Institute, where we will learn more about Forex. Elevate Forex Institute, taking you higher. In today's tutorial, we will be giving you an introduction to synthetic indices. What are synthetic indices? Synthetic indices are simulated trading tools that simulate or reflect real financial market behavior. Synthetic indices are typically simulated trading instruments based on the movement of an underlying asset, usually stock markets and other financial markets. Synthetic indices are unique indices that mimic real market volatility and liquidity risks common to other financial markets. Conversely, synthetic indices are like regular trading tools that fluctuate frequently, allowing the market to operate 24 hours a day, 7 days a week, undisturbed by natural events or news. Volatility indices mimic or replicate the behavior of financial markets, but because they are not like currencies, they are not affected by fundamental factors, such as announcing higher interest rates. Composite indices have constant volatility. Here, volatility refers to the degree to which prices change over time. They have no market and liquidity risk and are not subject to natural phenomena. According to derivative experts, synthetic indices are indices designed to mimic real-world markets and movements. In practice, they are programmed to mimic real markets and movements and rely on cryptographically secure random number generators that are regularly verified by independent third parties to ensure fairness. One of the best features of the composite index is that brokers cannot manipulate the market because the random numbers generated in this market are programmed using a cryptographically secure computer program and are transparent. Please don't get confused. Many of the best CFD trading platforms offer commodities trading marked VIX 75, V75 or Volatility 75, but only the one that can be traded through derivative MetaTrader 5 is the best. In other words, if your online CFD trading platform offers Volatility 75 or any other synthetic index, chances are it's not real. Well, at least not the one we'll talk about later in this article, which uses a minimum lot size of 0.001 due to the extremely high leverage. Deriv is one of the leading volatility index brokers offering synthetic indices along with the VIX 75. Deriv provides continuous price feeds for up or down trading and other synthetic index trading options. You will have the lowest possible spread and the highest possible leverage to trade any index from the synthetic list. You can practice trading synthetic indices on a demo account to see them in action without risking any money. Getting started is an advantage because you can learn about volatility indices and how to trade them without risking your own money. These volatility indices can also be used in binary options trading, but we will focus on how to trade them in the same way we trade in the Forex market. Trading synthetic indices can be seen as training in understanding real markets as a step before moving on to trading more complex instruments such as Forex and stock indices. Synthetic trading becomes easy if you understand how the market moves with the right strategy. It can be argued that synthetic trading is much better than currency trading, especially since foreign exchange markets that close on the weekend are heavily influenced by mundane events. The rules of the material world are the realm of the composite index, so you can't trade with real feelings. In addition to that, lagging indicators don't help you much because they try to predict where the market is going based on past price action, and things like price action never affect the composite index. The next point will be very helpful if you want to find a way to consistently profit from the composite index. After trading synthetics, I have noticed that double top and double bottom price action patterns are more common than any other pattern. The generated random numbers show a rising price index, similar to real-world fast-growing market dynamics. For example, the algorithm generates random numbers that reflect the explosive growth of exponential markets. The algorithm is based on random numbers, so composite indices are constructed based on randomness to reflect volatility levels or other market conditions. Composite indices attempt to mimic entire market types, similar to how stock indices have a more general focus than single stocks. Composite indices often rely on randomly generated numbers and sometimes stock market volatility. Forex is based on the movements and relative strengths of countries' actual currencies, but composite indices are computer-generated random numbers that cannot be manipulated by any fundamental or political aspect. A global recession or a pandemic issue such as the coronavirus or political unrest in a country. Market movements do not depend on fundamental indicators. The main driving force of the foreign exchange market is the fundamentals that push the market to a certain trend, but since the composite index is independent of the fundamentals, there is no sudden risk. Releases or volatility news based on fundamental issues. Just as boom and crush break based on the average number of ticks, depending on whether you trade boom 500 or boom 1000, the same happens with range break indices. Boom and crash indices have medium dips, declines, or high prices, booms, that are in the 1000 or 500 tick range. Range indices are indices that fluctuate between two prices or ranges. Sometimes they go out of bounds to create a new range. Staggered indices are indices that have the same probability of moving up or down in a series of prices with a fixed step size of 0.1 and a contract size of 10. You can choose different synthetic markets with high or low risk characteristics based on your risk appetite. You have the option to select a range of synthetic markets with lower or higher risk /reward characteristics. Perhaps one of the reasons why the most popular VIX is the most popular is that it is easier to make a lot of money even with small hands. Thanks for watching. We would like to hear from you. Elevate Forex Institute, taking you higher.